Good morning. My name is Louis de Silva. I am the CEO of Harz Potash, ASX listed, with a world-class project operating in Germany, in the heart of what was East Germany in Thuringia.
Louis, thanks for the introduction. Good to see you again. It's the first time I've spoken to you for Crux on this platform, but obviously we've known each other for years. We've bashed around Africa together and many other parts of the world. Can you provide a little bit of background for the viewers, because this is your first time as CEO. You joined 5 months ago, just over 5 months ago, your first time on Crux as CEO. Could you give the viewers a little bit about your background, please, and how you came to South Harz?
Thanks. Good to see you, Merlin. And I think I don't have a typical sort of background, but certainly the last 15 years, I've been less of a mining engineer and more of a corporate, adding value to shareholders from the corporate side. Having operated in Africa, as you mentioned, and created, I think, a great deal of value for our shareholders, either through partnerships or M&A. I then, 2013, ended up in the agricultural sector almost, in a phosphate company. And what I find impressive about that space are the people, the caliber of people, the knowledge. And so 12 months ago, there was a process that began, thereabouts 12 months, a process began for South Harz, looking for leadership for the next level, as the company was about to deliver a scoping study, and subsequently looking at how do we take the project from concept scoping study to a full feasibility and ultimately to developing the project. So that's how I got involved. I loved the space, and I think the opportunity, as it'll transpire, is a huge one, because a lot of the risk boxes are already ticked for South Harz.
So a lot of the risk boxes are ticked in the sense that the company published a scoping study in the summer of last year. There's I think it was August last year that it came out, and you joined in November. Could you just summarise, just kind of very briefly, the state of the project, just kind of recap the key aspects of it?
Yeah, look, I think the way to look at this project, because there is such deep history in Germany, it's where we're operating, where the potash industry has originated from. It is the cradle of potash, as our resident country director says. It is very much, there is so much history, well over 100 years of potash experience. And Ohmgebirge, which is our flagship project, so we have 5.3 billion tons. So we have enormous scale and potential. But our flagship project of Ohmgebirge would have been the future extension of the Bischofferode mine, which closed down almost exactly 30 years ago. So had that continued, we have a project lifetime of 21 years. Had that continued, it would have been mined today. So it's what?
Why did that Bischofferode mine close? I mean, what were the kind of the surroundings, circumstances for that?
It goes back to post reunification. There were, and without getting political, and going over the I think problematic and very deep scar that it's caused in terms of history, almost all the East German potash production was closed down overnight, except one mine, which is still with K+S today. Everything else was closed down. So an industry that was employing 4,500 people into the early 90s, overnight was closed. And so you have that's 30 years ago. That's when I graduated. There's still an enormous amount of confusion and support, because they felt that the mines should have continued operating. So one of the reasons for taking the opportunity is because it is essentially a brownfield project. It's an extension of what would have been mined. So,
were those closures because they were effectively state-run operations, and like Britain in the 1980s with the coal mines, just the government wanted to kind of privatize and but perhaps they were uncompetitive because they were state-run, and it was a decision to kind of rip the plaster off, perhaps without thinking through all of the consequences.
I think the parallels are certainly there, and it was extremely political. When you look at the East German and West German production, they were comparable, they were significant. I couldn't tell you in terms of the delivered costs or operating costs of those businesses, but there was a lot of, over the years, small players that became integrated into larger players, and without getting into the politics of what BASF and the government did, and subsequently what became K plus S. I think the parallels to British coal industry is not dissimilar. But the fact being that, you're in a completely different space in terms of commodity, and very, very much one that's needed, especially when you talk about food security in this day and age, which is it's an easy concept to understand for the average person on the street.
When you talk about the boxes being ticked, let's go back to the scoping study. The geology, your resource is, you've got 338 million tonnes of resource, and you're planning a 20-year mine life, 21-year mine life on it to produce 1 million tonnes of muriate of potash. How much rock do you have to mine to get to the 1 million tonnes of, on an annual basis?
Well, look, the grade is 13.5% for Ohmgebirge. So the throughput will end up being 4.5 million tonnes per annum. The beauty of when I talk about the risk boxes being ticked, the beauty is that normally you don't know what's in the ground. You don't know what actually you're going to get once you get into the ore body. In this occasion, we know very well the geology. With the mining, it has been performed for over 100 years, so that's tried and tested. The processing, the two institutions that came out and became private companies that are, preeminent authorities on the processing of potash and the mining of potash are KUTech and Erkers. Our office, which we didn't have 12 months ago in Enfurt, is in the same historic building as Erkers. KUTech is literally a stone's throw away from where we operate. So we have all that embedded knowledge. So all that risk, just last week we announced we took bulk samples from 800 meters underground, 5 tons of it. No other project would be able to achieve that if it wasn't for the existing infrastructure and old mined out areas. So we are cooperating with our neighbor to go underground. They allow us access and go down the shaft, 2 declines, 800 meters, and we take 5 tons of material. Nowhere else can you possibly.
So is the shaft that you can access? So the shaft that you went down, that's something you can access, but presumably you're going to have a new shaft for taking out 4.5 million tons rather than using the kind of the roundabout route that you kind of went in at.
Yeah, the base case as per the scoping study on August the 8th last year was very much a greenfield option. But we know there is existing infrastructure elsewhere that could be used. But the base case, the 620 million CapEx, US dollars CapEx, is including 2 shafts, one for hoisting, one for ventilation. But as I said, the opportunity exists with existing infrastructure to access the ore body. We have a unique neighbor. They produce 100,000 tons of it's a solution miner, 100,000 tons of MOP per year, uriate potash. It's unique because it's they're mining the Carnallite, not the Silvanite or the we would normally mine. They've got a dual business model. They also backfill industrial waste. So that is a functioning, very well run operation next door to us. So we've had access because we have a good relationship with them as a neighbor.
Goodness, so many questions jump up. One is, did you consider, I know that you joined after the scoping study was completed, but has the company considered duplicating their model of solution mining the carnallite and backfilling industrial waste?
It's pretty niche. I mean, it's as I said, it's unique. We don't know anywhere else that does it from carnallite, and it's small scale by their own admission. It's anywhere between 80 to 100,000 tons per annum. So it's not a game changer. If you want to do, I don't know any extremely large scale solution miners. When you look at some of the North American producers, they're all much smaller scale. But we're very much focused on Plan A, is mining the sylvanite. We think the potash market is extremely attractive. It's obviously an oligopoly. And the 17 million tons per annum or so, our 1 million tons will fit in nicely into the market because we are in the marketplace at the end of the day.
Sorry, did you say 70 million tons? 70.
700. That. Yeah.
Just on the capex, you've got the total capex of 620 million, more or less, in the scoping study. About 110 of that is contingency and G&A. So let's do kind of rough figures. It's about $500 million, of which 170 is linked to the mine, and 340 odd is linked to the plant. Am I right in inferring that you will be looking at lower cost mining capex options, which is to access, may perhaps start the operation using using the existing infrastructure to offset the upfront capital cost, so that you can get started on the existing infrastructure, and then when you need to ramp up, look at putting in the new shafts?
Look, I think that we have to control what's within our control and manage what the elements that are within our parameters, let's say. So that's all good stuff. What we have to focus on is, will the market think that $620 million is too much upfront capex? I happen to think that, when you look at, and of course I'm talking my own book, but when you look at the various projects around the world, the capital intensity is significantly high. Of course, Janssen is an anomaly. They'd spent $5 billion before they gave the green light to go ahead with the project. So it's unique, right? So Janssen is a unique beast. So it's not totally comparable. But when you look at other opportunities that have been converted geographically, I think our capital intensity is significantly, even if the numbers were to deviate, it's still within the norms and acceptable margins of competition, if you like. It's a competitive capital intensity. So I think the opportunity exists to do perhaps what Highfield is doing, but our base case is very much 1 million tons per annum, go straight into it. The economics are better that way. But if the hurdle of the capex is too great when it comes to funding the company, then of course we can look at a phased approach, of 500,000 tons per annum, and then another 500,000. So
yeah, you're kind of touching on the nub of the issue here, is that you've got a project with a nice NPV, a very nice NPV, and yet the company is trading at $20 million Aussie today at the moment. Really, you're in an exercise of kind of how does an ant eat an elephant, really, or kind of how do you kind of that's your job, isn't it?
Pretty much. And that's the challenge. You're right. And look, it's a 1.3 billion post-tax NPV at an 8% discount rate, which probably, when it comes to financing this project, I dare say that the cost of capital will be less than 8% in a G7 country. There's going to be all sorts of funding available to us, not just commercial banks, I think. So you're right. It is an ant eating an elephant. I think that what we have to do is just focus on the basics. We will deliver before the year end a rock solid pre-feasibility study plus minus 20% accuracy. And there are a lot of studies out there that profess to be a PFS or even a definitive feasibility study that have a lot of holes. So we have appointed Hatch to lead that, to work with KU Tech and Ecos So we have total confidence that by the end of this year, which is not that far away, we'll have a solid pre-feasibility study that I think will get the attention that it deserves. As you say, the ant eating the elephant. So we have to repeat the message time and time again until the investor base understands what we have. Now, we are following, if you'd said to me 10 years ago, what's my blueprint for getting this thing financed? My blueprint would have been what Highfield had done with EMR Capital, because they took away any debate about how are you going to fund this. And then the biggest issue for them has become 7-8 years of permitting. Now, let's talk about the permitting, because permitting is key whichever jurisdiction you go to. What we have, and what demonstrates our ability to work with the authorities, we have one single local authority. There's no federal approvals. So we are in constant contact with the authority, which is the Thuringian TLUBN. We had a meeting 3 weeks ago to kick off the environmental impact assessment. There are no red flags. There's any constructive dialogue. So we know what the permitting is, and we will follow those steps to ensure that we do it on a timely basis. So permitting is key wherever you go. But in our case, we know there are four stages of approval, which is the regional and spatial planning procedure. That'll be done in 12 months' time when we submit our EIA. And then we go to step 2 with the TLUBN. And step 3 is the approval of the main operating plan. Or you go for a more specific special operating plan, which doesn't require, regular approval. So our Ohmgebirge flagship project has a perpetual mining license, which is historical. So
I was going to ask about that, because you've recently had this 3-year extension on 3 exploration licenses, and you've got some licenses which are permanent mining licenses. How much of the project lies within the exploration license, and how much with which you've got another 3 years on at least, and how much lies within the permanent mining lease?
Well, so you're right. So we have three perpetual licenses, which are historical. So the only approvals are the ones that I just mentioned in terms of permitting. The others are exploration permits. So Kolsted and Grafenturnen were the 2 that were recently renewed. And to give you an idea of the efficiency of the process, we submitted for both of those. We submitted to ask for the extension, and within less than 1 calendar month, the extension had been granted. Now, I've worked in many jurisdictions, first world, third world, developing country, whatever you want to look at, and I don't know any jurisdiction where that's happened. So it demonstrates A, the willingness, B, the dialogue and the relationship, and that they want these opportunities, which were brought to the company and via 3 tenders. So the Grafenturnen and Kolsted demonstrate the relationship with the authorities. The other 3 have perpetual mine license. As you said, Ohmgebirge has 338 million tons. We have a total historical resource of 5.3 billion tons. So we're just talking about a small percentage of the entire ability of the inherent value that's in the ground. The rest.
On which license would the first stage of the operation be?
Ohmgebirge. So that'll be the flagship, and the one that has 13.5%.
Gotcha. Okay, so that's one of your perpetual mining leases.
Yes, correct.
Right. Gotcha. Understood. What's the just while you've been talking, I've been thinking. I wonder what the history of this is. You know, how long has this project been worked on by the team? Because you talked about the local dialogue. I mean, obviously you've got some a partially local team that has got a lot of history with it. But when has this incarnation of the company or the project been put together? And what project then company?
So the company predates the project, as often is the case in our sector. But 2017, which is a long time before I joined. So 2017 is when the tender took place and the licenses were acquired in a competitive tender. So the company used to be called Davenport Resources, and more recently, in the last 2 to bit years, took on the local name, which I think is far more apt in terms of has more meaning. So we have Harz Potash is the Australian listed, but below that we have 100% owned Harz Cali, which is the local operating company. So that's what locally it's known as in Germany. 12 months ago, we didn't have a team on the ground. We had one geo, we had a CMO that was overseas, we had a CEO that was overseas, and we didn't have an in-country team. Now we have an in-country team. In December, we opened a local tiny office in where the licenses are. Literally, now I was going to give you the other name, but it doesn't matter right now. I'll remember it. But we opened a local office in December. We had dignitaries, mayors, local business people, and we had the brass band from the old mining brass band in their uniforms. We had everybody supporting us, and our little office locally in it's not cliche, names gold from my head. Our little local office is in the old, what used to be the mine hospital before the mine was closed. And upstairs, you've got this wonderful museum from the geology all the way through production to mine closure. There's a wealth of information and knowledge that's there. So, so we're in the heart of it. We've got a team locally. We have a new COO in Lawrence Bertlet that joined on 1st of January. Lawrence spends 50% of the time in country. He's a Canadian, and more recently was head of mining for Eurochem, pre-invasion of the Ukraine, of course, and life has become more difficult for foreign nationals working in those companies. So Lawrence, we were very lucky to serendipitous, in fact, to be at the stage where we could bring him into the company. Initially, he joined as a non-exec and we became COO. And before that, he has a wealth of experience in potash. He's been an operator with Agrium. He delivered the K3 expansion in Saskatchewan for Mosaic, which was a $2.9 billion US project. Delivered that ahead of time on budget. So we've got a mine builder as COO. And he's also done EPCM, so he was the head of SMC Labland's office in Saskatchewan, and so he's seen every project. So for me, it's an endorsement having him join as COO, and that he's inside the tent. He can really see the opportunity for what it is, and in the ability to convert it and to develop it. So we've changed the entire complexion of the team and the company.
Thank you. That's really helpful and really useful to know. Just coming back to the work plan for this year and the PFS that you're doing. As you know, scoping studies are normally this is what it might be. And in the PFS, that's when you really have to start kind of digging into the numbers and looking at the trade-off studies and trying to work out what is the optimum size, what is the best fit project that will then be studied for in the feasibility stage. Can you give me some indication of the key areas that you'll be looking at as the components of the PFS during the course of this year?
How long do you have? I think, look, the base case is what it is. I think, of course, there are opportunities to optimize the base case. So when I talk about the base case, we're still looking at 1 million ton per annum throughput of product, and 4.5 million tons that need to be hoisted. The blueprint for this is we want to create the lowest carbon footprint operation there is. And that's totally achievable for multiple reasons. Number one, as I said, there are no unknown factors here, no unknown quantities. We have committed to having no permanent stockpiles because the company is going to be producing 2 tons of salt as a byproduct. So we have to create enough void space either from our own operations or from existing old mine workings. We have to backfill the material to ensure that we commit to the lowest impact mining possible. So that's absolutely key. So the focus has to be not only the economics and how we make this work to get the best return for shareholders, NPV and IRR, which is already, if it stays where it is, it's already a phenomenal project. But essentially, we have to think about no effluent into local water, which is very topical in Germany with the scale of the potash industry historically, and no permanent stockpiles. So we're investigating as part of all those streams. We have to think about what is achievable with existing infrastructure. Now, part of the planning is going hand in glove with the EIA and the PFS, whereas in other jurisdictions you might do a PFS and a DFS and then go to the authorities and say, okay, this is where we're going to plan to build a mine processing plant. This is where we're going to convey left, right, and centre. This is different. All those discussions for the spatial planning happen up front. So we were already looking at 3 optimal areas. We're already doing the fauna and flora studies as we speak. So actually, if it stops snowing, we'll be able to carry on. This is happening. So we've already identified that. So those are the key work streams that have to fit in. So it's optimizing.
So in a sense, once you've identified kind of the 3 sites and had that conversation with the local authorities, you can start putting the detail on the scheduling and the costs and the operating implications of having those sites and the resource where it is.
Yeah, and some of those trade-off studies that you're talking about, we're doing now. So we kickstarted that at speed in the last 5 to 6 weeks.
One of the big global themes, of course, at the moment is an energy transition and energy security. And Germany, from the outside, it looks as if Germany's making some pretty crazy moves, closing down its nuclear plants, firing up coal-powered generation, and of course they've reconfigured their LNG sourcing over the last 12 months, and they've done an extraordinarily quick job of that. However, from the outside, it still seems as if German energy security is quite fragile, and there are indications that BASF is closing down fertilizer plants, and there's kind of dramatic voices on social media talking about the kind of the deindustrialization of Germany. Which of course is perhaps over the top. What percentage of your cost base or your operating cost is going to be energy related, and does it concern you that BASF or that fertilizer production has had to close down this year?
Of course, the power generation costs, we've been monitoring that very closely, and it's going to we'll have a much better view of that at the end of the PFS. I can't hand on heart tell you today what potentially the cost is going to be, but if you've been asking me this question in August the 8th last year when the scoping study was over, it's a completely different landscape. So we accept the fact that there has been an increase in cost, but I think it'll be level across the board. yes, Germany has secured what we'll like to see the right level of energy at the right cost, or may look retrospectively prohibitive compared to others. But it secured it, it closed it off, and it did the right thing at the right time for Germany. So I think, for us, there'll be some normality when we're delivering the PFS, and there'll be even more normality and more, the market would have settled down when we're delivering the DFS come 18 months' time. So we'll have a better understanding of what the energy impact is going to be. I can't tell you today it's going to be 22% or 5%, but the world has adjusted. Policies have changed for energy. Nuclear is now back on the agenda across the board in a number of countries.
Not really in Germany yet, but hopefully
really
they'll come around to it.
But it's moving. The world has looked at energy in a different way. Not only energy, but mining in a different way. So it has to look at self-sufficiency. We're living on this little island called Great Britain, which is becoming less great by the minute. But energy on the continent is normalizing, and what was the norm 6-7 months ago with the spike in gas prices and energy prices is not really visible now. We, talking to our neighbor, we know the impact that had on their small scale operations and their ability to adjust to that meant closing the plant down for 2 weeks and running off stock. So of course, it had an impact, but only for a period of time. Of course, it's going to impact your bottom line profit. So,
well, as you say, hopefully we'll get more clarity on the long term prices as time progresses. You mentioned earlier that if you were financing or building Highfield 7 or 10 years ago, 7 or 8 or 9 or 10, I can't remember how many years ago you said, but you said that you can understand why they did what they did with earmark capital, and what's your kind of approach now, or is it too early to say? Are you just going to kind of focus on the PFS at the moment before you can consider financing options, or even start thinking about the kind of the landscape?
I did mention that blueprint from 10 years ago would have been a good one. You're right. So I kind of led you to this question. It's the key question for any developing company. We're not an average developer. We don't have results from the drill bit coming out every other month to excite investors. We're not a precious metals company. We're falling somewhere, as I've been told multiple times, between mining and between the chemical side of things. So the scoping study was the first stage to really show people how serious the project is. The PFS will be the next stage where we're able to really hang our hat on the numbers that are going to be delivered with certainty, plus minus 20%. So whatever opportunity comes along the way that provides the best value for shareholders, then that's what we'll look at. And I think we have to get in front of all the players and demonstrate that this is a real project, that we've got real people on the ground, we've got real people that are wanting to build this. And very importantly, from a social perspective, we've got the support of local communities that want to see this back in production, but are still bemused why it closed 30 years ago. So all the elements are there. We have to talk from, every rooftop, every mountaintop, whatever, get the message across, reiterate the message, and there's no substitute to the results. But we're not an atypical resource development company by virtue of the fact that each borehole is 750 meters deep and costs 2-point-something million euros.
Will you have, what's the news flow between now and the PFS? I mean, will you be able to produce kind of snippets or kind of updates during the course of the year?
Yeah, as you know, catalysts can be few and far between when you're at the study phase. So yes, I think permitting milestones. I think the EIA, the advancement of what we're doing on the ground with the communities. So certainly there will be news flow. Of course, as I mentioned, it's not as though we have a press release every week like a precious metals company that has got multiple properties. But we're looking forward to very much deliver a solid study by year end.
Well, Louis, thank you very much for the introduction to the company. I've learned a huge amount about the company in a very short space of time, and I look forward to following your progress during the course of the year. Keep us updated.
We will do, and thanks for having me on.